Everyone's waiting for this refinance boom that they're talking about, but let me tell you why this is a big mistake. This mistake could probably cost you hundreds of thousands of dollars in interest. This article states that there are 3.6 million people that could potentially refinance when interest rates drop to 5.5%, and there could be another 6.1 million that could refinance if rates ever got to 4.5%. But the question you need to ask yourself is, when is this ever going to happen? And what's the cost of waiting for all of this to potentially go down? Instead of waiting for these rates to come down, why not look at a better strategy that could potentially wipe your mortgage out in years instead of decades? My name's Sean Uehara. I've been a mortgage lender almost 20 years, and the first lien HELOC is by far the best strategy that you need to understand as a homeowner, because the banks don't want you to know this. Make sure to save this video and follow me for more tips, because I show you every single day real life examples of how we beat the bank and save our clients tens, if not hundreds of thousands of dollars in interest. Let's just say if we were to refinance at 5.5%, what exactly would that look like? So let's just take a loan balance of $450,000, somebody who makes about 10 grand a month, and they've got about 15 grand in a checking account, so not a ton of money saved. At the end of the month, they've got about $3,000 left over. If we compare that to a 30-year fix at 5.5%, we could potentially pay that mortgage off in less than 10 years, and it would save this client $270,000. Now, let's do this example at 4.5%, since they said there would be another 6 million people that could refinance. Same example, 10 grand a month, 15 grand in a checking account. We're gonna reallocate that into the HELOC. Same thing, we've got about $3,000 left over. 30-year fix at 4.5. That same amount could get refinanced, paid it off in 10 years, saving this client $153,000. Our HELOC rate is 8.3% that we're using to model this out. But remember, we calculate interest on a daily basis, not your amortized mortgage here. So 8% is not what we're truly paying. In this example, we're paying $217,000. That would be the equivalent of having an effective APR on your house of 2.8%. A lower rate always sounds nice, but if you could wipe your mortgage out in a number of years, get yourself out of debt, that's the real win. If you want to learn how to pay your home off faster instead of waiting on the sidelines, hoping and praying for interest rates to come down, send me a message and I will show you how we can beat the bank and you can start taking some power back in your mortgage.